You caught your breath after the victory lap around a studio table. It's good to see you, sir. How did you feel on Friday when that number dropped?
Well, I think it makes sense what's going on. I mean, as you just talked about, it's not clear that the data has been slowing down. GDP last quarter was around 3. The Atlanta Fed GDP now for this quarter is around 3. And if you take this combined with, broadly speaking, strong data on consumer, on durable goods, it makes sense that the labor market is also still hot. It never made sense to say, oh, the economy is good, but the labor market is bad. You can't have it both ways. Either it's good in the economy and good in the labor market. You can't have that the economy is good and the labor market is bad. That just never made sense. So that's why, given the economic data coming in, the totality of the data, as Jay Powell would say, I still think that it's very obvious that things are still chugging along.
Well, let's sit on the totality of the data. So the survey data last week, the ISM's, employment components, not fantastic.
Well, the service headline was still good.
Well, we can get into that in a moment. The jolts as well. If you look at the jolts, job openings were up, but hiring was down, the quits rate was down. If things were great, you'd expect the quits rate to still be elevated. You'd expect hiring to be elevated too. Some people have pointed out that maybe this is inconsistent with the broader data. What do you say back to them?
Well, I think that what's going on in the JOLTS survey is really a normalization. Because in the JOLTS survey, what you also have that the layoff rate is still 1. The layoff rate has not gone up, meaning it's not the case that companies are firing workers. You know, on the other hand, just seeing a little bit less hiring. So that's just a normalization and combined, of course, with still steady immigration and at the same time tailwinds from defense spending, from AI, from energy transition, and consumers that are not very sensitive to interest rates going up because of locked-in low interest rates. We still have some fairly strong tailwinds to the outlook and less sensitivity to what rates are doing. So therefore, it still makes sense to believe that over the next several quarters, the economy will do just fine.
Well, it's that sort of thing that's allowed a lot of critics to look at this decision in light of the jobs data and say it was a mistake to go 50. But Torsten, is there a world where this jobs report wouldn't have looked as strong if they didn't go 50, that it helped maintain strength in the labor market and reinvigorate confidence?
Well, the key issue, of course, as usual, is what are the long and variable lags? The Fed textbook would say that's 12 to 18 months before anything starts to show up. But as we know very well, the stock market is now becoming a very important indicator for companies in terms of, are we doing well, are we not doing well, should we hire, should we not hire? And given the significant tailwind to risky assets, credit spreads are very tight, both on IG, high yield and loans, and also when it comes to the equities going up. All that may actually exactly imply that we have had faster transmission of monetary policy because the signaling, the forward guidance has been coming through much quicker than what the textbook would have predicted.
Does that suggest then 50 was a mistake?
Well, Jay Powell said at the press conference 10 times that they did this to recalibrate monetary policy. So there was a lot of this time, of course, the discussion, as of course also you guys had a lot of here about why did they do this? What's recalibration as an excuse? And of course the excuse was inflation has now come down. But given that the economic data is still strong, it really is Goldilocks with inflation back close to 2%, and the economic data just continues to power along. So that's why the Fed is now stuck at a situation where they need to say, well, should we look at the economic data, or as you just said before, Danny, or should we turn to inflation and say maybe inflation is a risk of moving up again?